Welcome to New Futures Trading, and I thank you for stopping in and to keep admiring, and I'm hoping that you are learning a little bit about what the markets are all about, in a sense, how they move systematically. What I want to show you right now, it's September 24th, Bank Nifty futures. I'm using here a tick chart, 144 tick chart, and at the end of the day, Bank Nifty futures did a nice run up. You calculate this run from here to there, and you figured out, actually it was right here where it finished, and yes, you would know that's where it finished, and you tell me how much this is worth to you. How much this is worth to you. Trading with one contract, it would have a certain value. Trading with 10 contracts, it would have a different value. I trade with 10 contracts in almost everything I do business with. Different folks use different contracts. I like number 10. This one here, if my numbers are correct, would have been worth way over $1,000 in a relatively short period of time. The question is, how do you know this is the end for the day, and how do you know this was the beginning of this run? That's what everybody wants to know. And yes, you can know. You can calculate this and pretty much have the answers in front of you before you do business. The first sign that this could be the beginning of this run, you see that sign back here. You see it back here. You see right over here, you can see that the market is manufacturing what we would call a shoulder. So then over here, this is so narrow, the Bollinger Bands are so narrow, and you are separated, which means that this is going to drop down and have a quick reversal, because this is so narrow, you don't expect much down. As it drops, another thing you notice, because as this is manifesting like this, one thing you notice is that you getting divergence, meaning the price is going lower, but the MACDs are not going lower at that point. See? So that would say to you, look at the MACDs, look at the power, what I call the power of direction, which is this indicator, as a gas pedal. Look at this as the car. It's running down, but the gas pedal is not to the floor, so it's not coming with it, so this is going to slow down. Right here, there's actually no bar set up. For example, this bar closed up here, this one came down, came back up, didn't even go inside, so there's no bar set up. Here now there's a different story. Now here you have a dual bar set up, and then here you have another dual bar set up. You got a 3-bar bottom. Then you still have the diversions. So you got a shoulder, a head, the bar set up, the divergence, and the separation of the Bollinger Band, the BBs from the Bollinger Band. This is where you take action. This is where you would buy. And then right from here, you already expect a target. You expect a target somewhere up in this area. And the way you measure this target, my pencil, here it is. You go left shoulder to the head. Then you put it in top there for now. You expect a second wave of bars to come to this area, slow down, break out, and go up. So you are thinking that a target could very well be measured up to this area here. Now, you're not sure yet that it's going to go that high. Because you also could say to yourself, well, from here to here is a deep retracement, a potential deep retracement. So I would go from here down to here for deep retracement. So a deep retracement, I'd be looking again at roughly this area here between this yellow and this green. So I'd mark first the green as one target, two targets, and my third target is not in place yet. It's not in place yet because I need more bars. So as this runs like this, now you know you got the second shoulder here. Once the second shoulder is formed and it breaks out, now you take this and you put it here, which would be the right shoulder. Now you know you're hitting the first retracement. You're hitting the first retracement, and you can see right here that you're starting to get separation. You know the target, you expect the target to be at least this area now, because this shoulder, this is the breakout. You measure this one, that's the breakout. So now you want to bring this down to here. You're not too far off, and that is good. So as this goes to the right, oops, I showed the whole chart. That's okay. As this hits that deep retracement right here, and you got separation, what you do is you take half off the table, because you know now that the odds are of getting a retracement is there. The other thing you know is that this run here is 100%. So you have many reasons to take some off the table from here. Oh, that's not the one. I want the Fibonacci extension from here to there. So you hit 100% extension, you hit the deep retracement, you have separation here, take some off the table. However, you still expect the target to be up into this neighborhood, because that's also the measurement of the left shoulder. So you take half off the table, and then you wait for the next potential entry. And wonderfully, slow down with the 23, slow down with the 38, hits the 50, and it gives us a shoulder, head, and a dual bar reverse. So I have two bar setups, which means the way these bars look right here, the way they are closing and where they are placed, it is encouraging to buy again right here. I have the half retracement, the 50%, which is what we call a home plate. I have the slowdown of bars. I got the picture that I look for, that means that this area can go up. And now I also have support on my Bollinger Band. And I still have a target to reach. So I ran this trade with 10 contracts. I could keep the 10, or I can run this one with 10, take 5 off, buy 5 more again because everything's still showing up, and then when I hit to my target, I can exit. The other wonderful thing is, by getting in, getting out, getting in, getting out, I make more money than if I just buy and hold. Because if I make money from here to here, and then I take my money back and buy it again over here to go to here, I'm going to pick up this much more money again. This is why intraday is so profitable, if a person understands how the market moves systematically. Now, the market right here is giving us, I want to remove this. I use the word the market a lot. The market to me is any symbol that you are trading. You could use the word the market as a general thing, or it could be a stock, could be gold, could be oil, could be. So when I talk about the market, I'm talking about this particular product that we are looking at. Do you find this fascinating that this would do exactly this? Do you find fascinating that you can measure a pattern like this? This lines up with this bottom right here. Shoulder. You bring the line down, and then on the right shoulder, you expect that to be a target. Do you find it fascinating that it hits that target? I find it fascinating. See, I love to figure things like this out. I love because, and this is not just this moment, this time, with this product. It's with all products, it's the same thing. Once you know how to systematically measure everything, and you put the pieces together like a puzzle, the answers pop up. All of a sudden, you get so excited and you have the confidence to do business with the market because you know what you're doing, you know what the market is going to do next, and that's how you can make a lot of money in the market. Now, trading the market, you could also lose a lot of money. But what I find is that people that lose money, they don't understand how the market moves systematically. The other part is most people that do business with the market do not have the psychology of the market. They don't have the mentality that allows them to do business with the market strictly because of the measurements. Most people that trade the market is all about money, trying to make money. And they see a lot of money and they take the money. They make their losses be big, but the profit's small. That person has no control over their brain, over their emotions, and that just costs you a lot of money. So mind over matter, it's the number one thing that we do here at New Futures Trading because it is so important that you have absolute control of your emotions. And then the second part is we'll teach you here and coach you and hold your hand for the next 12 months. It is to get you to really learn how to see these moves and how the market is so consistent. So consistent. Now, what I'm going to do next, you've seen me do several videos on the futures, on the Nifty futures, and I'm going to leave this symbol up, and I'm going to see what this market wants to do Monday morning. And so if I manage to get up at midnight to look at the market, then I will be able to do a live trade for you using Bank Nifty futures. Well, I pray that you enjoyed it and that you are convinced that there is a way for you to be profitable with this market. Whatever the market, Forex, if you can trade Forex, great. If you can't, whatever you want to trade, the same thing I'm showing you in each video applies to everything. Everything. And with that, thank you for listening.